Benchmark, the voice of business. Presented by LMD.
On this edition of Benchmark, in the hot seat today is the Managing Director and CEO of Hatton National Bank, Jonathan Allis, who gives us his unique perspective on the banking sector. Then, Nielsen's Managing Director, Shaheen Carter, discusses the Business Confidence Index, which headed towards higher ground in May. And Deshal Dimel, economist and LMD columnist, wraps up the show with his take on Sri Lanka's macro outlook. That's the lineup for Benchmark.
Hello and welcome to Benchmark, the big picture business program. I'm Savitri Rodrigo. Our focus today is on Sri Lanka's banking sector, where consolidation is underway as proposed by President Mahinda Rajapaksa in his 2014 budget. The central bank announced a few days ago that it was pleased with the progress that has been made on this front, and Fitch Ratings at the same time noted that the consolidation would actually boost economic development and increase systemic stability in the system. But we are going to get an expert opinion, and in our studios today is the Managing Director and CEO of Hatton National Bank, Jonathan Allis. Welcome, Jonathan. Nice to have you on the show.
Thank you. Good to be here.
If you could just broadly describe the local banking sector at this point of time.
Currently, the banking sector is very competitive, Savitri. Against the backdrop of lowering interest rates, increased liquidity in the system, and somewhat flat credit growth, we find that basically banks are in the process of finding their way in terms of how do they do business in an environment of this nature. We are still recovering to some extent from relatively higher rates in year 2012 and 13. And some of the NPAs that took place during that time still need to be recovered. And the impact of these reduced rates maybe has not filtered through yet to some of these areas. We hope that cash flows will improve and recoveries will take place. Then we could take full advantage of the reduced rates in order to increase lending in these areas. To some extent, the impact of pawning also has been fairly significant with some of us, but we hope now a year on that the worst is over and that we could look forward to more stable and better times as we go on from here.
Now, you spoke about the low interest rates, the low credit demand, the high liquidity, things like that. Are banks actually equipped to handle the challenges they face in this operating environment?
Like I said, I think they're in the process of adopting to it. I think just to be fair by the banks as well, they have seen this before. I mean, Sri Lanka has never seen rates at this levels. Now, some of us have worked internationally and have actually lent money at 1% and 2% for decades, like against dollar-based funding. But if you were doing banking in Sri Lanka, you were used to 15%, 20% were very regular rates. Now, in 2011, rates were brought down. We all went gung-ho and started lending. But in 12 and 13, when rates increased, the impact of those 11 projects were sort of felt through NPAs, because some of these projects which were positive on a rate of 10 or 12%, suddenly they don't become viable at 14 and 15%. So to some extent, having just short-term reduction in rates doesn't help the economy, both whether you're in the banking sector, more so in the corporate or middle market sector, or in general the business sector. You need stability, you need consistency, and that helps You can't go gung-ho on a particular strategy, but more to your point on how do we actually manage this, it's a bit of what I said about managing your costs, being more efficient, controlling your overheads, using technology more, looking at new avenues of doing business. There are new emerging sectors to do business with, and we must learn to do let's say business at low margins with our corporate and other sectors, but learn to do more with them so that for narrowing margins it gets compensated with ancillary business, brings in some level of fee income, which makes it a profitable proposition for both company as well as the bank.
Given that the private investment trends have been somewhat modest, do you agree with the current monetary policy stance in the country?
I tend to support it. I mean, at a time when globally rates are down and then let's say there isn't much happening in terms of investment, and Sri Lanka should be positioning itself to attract as much as possible in investment by having the right policies in place in order to expedite some of the business promotions, the business investment opportunities, and thereby also enable local participation. So from that point of view, I fully support the low interest rate environment. Investors require that. It might have an impact on savers, the senior citizens who rely on interest to, let's say, maintain themselves. But I think new products such as annuities and insurance-backed products will come into the market sooner than later, which will support their day-to-day needs. To do business, to do trading, to do import-exports, you need a stable exchange rate environment. So while we saw peaks taking place, let's say at the beginning of 12, the beginning of 13, moving from the 120s to the 134s, to some extent over the last 6 to 9 months, we have seen stability in the exchange rate as well. And then if you go by the inflation figures that are being published, which is mid-single digit, they are pretty attractive for people. Like say, we've seen an increase in, let's say, prices taking place, but over the last couple of quarters, if you see the same AC Nielsen index, you will see that there is more price stability and that now volumes are starting to pick. So that's a bit of the confidence that I'm having, that when the consumer sees that prices are more stable, they will start planning their expenditures as well as their new projects.
Jonathan, the financial sector consolidation, there have been pros, lots of discussion, pros, cons, this is not the way to do it, this is good, but again there are other methods of doing it, etc. So, are those measures to induce financial sector consolidation appropriate in your opinion?
I think where we are today when it comes to the financial sector, we need to move forward and do this for some of the reasons that Fitch has mentioned in terms of wanting, let's say, a more stable financial sector, bigger companies, wanting, let's say, probably better regulation. When you have big numbers, it becomes that much more difficult. We also find that some of the smaller companies don't have the expertise that they need to manage, because at the end of the day, being in the financial sector is a very responsible job. I mean, that's why we have so much of corporate governance, we have so much of regulation, because you're dealing with shareholder money, you're dealing with depositors' money, and you've got to be responsible in the marketplace and not make bad decisions, bad choices. So if you take a bank, my personal view is I would like to see it maybe run as a subsidiary, so that you get the best of both worlds. You run it as best and efficiently as possible as a finance company. So maybe I'll own it 100%. It's a subsidiary of HNB, and then it will do all the right things that a finance company needs to do it. The advantage that it has is it's being managed by a bank. It has got directors of a bank who adopt the same level of corporate governance and, are used to the level of regulation that is imposed on a bank and then can extend it to that company as well. So you could merge, you could have a subsidiary parent model, you could actually take certain businesses and do it in different places. You can actually take certain parts of the bank and put it into the finance company and run it for greater efficiency. At the end of the day, you need to look at what is best for the customer.
Right, we're going to continue this discussion. We pause for a commercial break and we will be back with Jonathan Allis talking more about the consolidation process as well as the regulatory and maybe the HR challenges that could ensue in putting this consolidation process into place. Stay with us.
When we entered the industry in 1995, a new star was born as a fully owned subsidiary of People's Bank. For those seeking to grow their businesses, PLC provided the seed. We are not only Sri Lanka's #1 leasing company, but also the largest non-banking financial institution. Welcome to a new dawn for the nation. Introducing People's Leasing and Finance, PLC.
As soon as my salary goes into my HNB account, my family goes shopping just like a power play. Now with HNB mobile banking, wherever you are in the world, you can check your account balance and do your banking with ease. Wherever I am in the world, HNB is active on my mobile and tab 24 hours a day. HNB mobile banking. Bank anywhere from any mobile.
We're back on Benchmark with Jonathan Allis, the Managing Director and CEO of Hatton National Bank, or HNB as we popularly know it. We were discussing the financial sector consolidation process. So Jonathan, getting back to that, are you satisfied or how satisfactory has the process of this consolidation process been?
Central Bank has, I think, brought in fairly aggressive timelines. And that's a good thing. It gets all of us on our toes and we start working towards those. Maybe you might not meet it exactly, but at least you're working towards it. Now, last week we saw Central Bank coming out and announcing that they plan to give further support to the finance company. Now, a comment like that would mean that the finance becomes more attractive to either a local or international investor. I would also like to see maybe 2 or 3 other companies attracting international investment companies who have been in this business. That will be good for our industry as long as overall we benefit and we stay in line with the roadmap.
Now, we briefly spoke about pawning and what actually transpired last year and the impacts it had on the financial sector. The Monetary Board of the Central Bank approved the implementation of the Credit Guarantee Scheme on behalf of the government for pawning advances granted by licensed banks. What are your thoughts on this recently approved scheme? Do you think it is actually going to positively impact the bank's performance?
Overall, I think it will be positive. Firstly, the simplest is that the consumer, instead of they were paying exorbitant sums before, it came down to maybe 23%, then down to 20%, and now if they bring it down to 16%, you suddenly are having pawning at probably close to little, where SME was a few years back, maybe a year or 2 back, which is a good thing. Then that 1% cess or the savings that's going to be put aside is a useful thing. It gives you some kind of buffer, some form of contingency funding, but you're still dependent on gold. And the way gold has taken a beating from 2009 to 2003, and today I believe it's at 1248, you need to probably still watch it a little bit, because sometimes a drop can be a little drastic and you could still take a hit on the portfolio. So you need to manage it carefully. I think overall it's positive.
Jonathan, for decades, Sri Lanka has been talking about SMEs being the backbone of the economy. We have to uplift the rural sector. I mean, there's been discussion after discussion. Very little tangibility, though, has been seen. How can banks reach out better to the rural economy? What can they do?
You shouldn't have asked me this question. This is something I feel very strongly about, actually. I mean, the easiest thing is, people ask, what can banks do? Now, I mean, if you just take the papers today, you'll see on the FT a whole page of photographs of HNB engaging the entire nation on microfinance, celebrating 25 years of engagement. Now, that was done without any kind of push from any part of our society, through our own passion, through our own commitment, because we strongly believe in it and we will continue with that. So I'll come to your answer in terms of your question as to how do we support SMEs. But before that, I think that there is a lot more that needs to be done at a structural level. It's something that we underestimate. I think, like I said before, a lot of good things have happened in terms of infrastructure development, roads, bridges, buildings, all that was required to get from A to B to C quicker. But the whole purpose of doing that was in order to have our SMEs working in those areas, doing business and making them accessible to the rest of the country and the rest of the world. So you don't want all of these guys coming to Colombo and doing business. So maybe it's high time, while that infrastructure and other development takes place, it's time to start the industrial development now. It's time to start the SME development now. It's like running a company, right? If you're a CEO, you tend to create the framework, the vision, the strategy, and the framework for your top-tier executives. And then they run within that framework. They need little supervision. But staff at the lower levels require a lot of support, guidance, training. I think it's the same in running, let's say, the bigger business of a country. The corporate sector will run if you create an enabling environment for them. But just doing that will not probably take the SMEs and the micro entrepreneurs into the next space. And that's where a lot of support needs to be given. I think it's time to cut the rhetoric, cut the chase, and get down to action.
Let's hope for the best.
Thank you.
So that was Jonathan Allis, the Managing Director and CEO of Hatton National Bank, discussing the financial services sector with special emphasis on the banking sector and consolidation and SMEs and all those other related subjects. On the other side, if you want to know more about the economy, we have economist and LMD columnist Teshar Dimel, and for more on the BCI, the Managing Director of Nielsen, Shaheen Kader.
Sri Lanka's #1 leasing company is now the nation's largest and highest rated finance company with 2 international ratings. Let us move the nation as one with People's Leasing and Finance PLC. Sri Lanka's #1 leasing company is now the nation's largest and highest rated finance company with 2 international ratings. Let us move the nation as one with People's Leasing and Finance PLC.
As soon as my salary goes into my HNB account, my family goes shopping just like a power play. Now with HNB mobile banking, wherever you are in the world, you can check your account balance and do your banking with ease. Wherever I am in the world, HNB is active on my mobile and tab 24 hours a day. HNB mobile banking. Bank anywhere from any mobile.
Welcome back to Benchmark. I'm Anushan Selvaraja. Now for a closer look at the Business Confidence Index. With me is the Managing Director of Nielsen, Shaheen Kader. Now, Shaheen, the BCI is up again. What are the root causes of this about turn?
I think the organizations have seen a bit of a business upturn in the previous month, basically in April. And also, I think this has been combined with some sort of optimism about the economy. And so these two factors, I think, combined with lowering of the interest rates gradually, has seen a small boost, I would say, in the BCI.
Now, some have said the economy in general is improving, while others have said that incomes have reduced and that people have less money in their hands. Now, these are conflicting statements. So what does it say about our economy?
Anushan, our own data on FMCG shows an increase in consumer spend in the first 3 months of this year compared to the significant improvement compared to the same months of last year. But on the other hand, we see that consumer confidence is low. It remains low, and so what we see is as a result, consumers are sort of cutting down or slowing down on the purchase of non-essentials. And yes, so this dilemma does exist, and as a result of consumers shifting, I think their share of priority in their wallet, how much of the wallet do they share. So I think there is some amount of share where consumers are spending more on clothing, on personal care, which now they consider to be a part of their overall regular spend. And therefore they compromise on, some of the less essential products. So I think this causes some of this this mixed perception that is there right now.
How is our investment climate looking going forward?
Well, as per the survey results, Anushan, it is slow to pick up. Still, businesses do not see the investment climate to be, ideal, I guess. Opinion is divided between those who feel it's a good time to invest versus those who don't. So it's more or less evenly split.
Shaheen, where do you think the BCI will head in the coming months, or are things a bit too volatile to predict at this point of time?
I think it all depends on the interest rates and inflation. I guess if interest rates remain where they are or come down slightly, I would expect the BCI to go up.
That was the Managing Director of Nielsen, Shaheen Kader. We will be back after a short commercial break with the latest on our economy. Stay tuned.
When we entered the industry in 1995, a new star was born as a fully owned subsidiary of People's Bank. For those seeking to grow their businesses, PLC provided the seed. We are not only Sri Lanka's #1 leasing company, but also the largest non-banking financial institution. Welcome to a new dawn for the nation. Introducing People's Leasing and Finance, PLC.
As soon as my salary goes into my HNB account, my family goes shopping just like a power play. Now with HNB mobile banking, wherever you are in the world, you can check your account balance and do your banking with ease. Wherever I am in the world, HNB is active on my mobile and tab 24 hours a day. HNB mobile banking. Bank anywhere from any mobile.
Welcome back to the show. I'm Anushan Selvaraja. Now for a closer look at our economy, and with me is LMD columnist and economist Deshal Dimel. Now Deshal, how is the overall economy faring?
Yeah, Anushan, I think in the last few months, people have been digesting some of the data that came out in the central bank annual report for 2013. So some interesting analysis has arrived, and one of the big puzzles of 2013 was how, in a year that you had 7.3% growth, why was it that a lot of corporates found that no real major impact on their bottom line? And some of the interesting information that is emerging is how even though some of the aspects of the economy, like investment and net exports, have been relatively positive, consumption, which is usually one of the most, the most significant contributor to GDP, had actually been quite moderate in 2013. So I think that is one of the major factors that has affected corporates in terms of the demand for products that are produced in this economy, and I think that is an interesting kind of finding that has come out, and it'll be interesting to see how that pans out in 2014 as well.
How would potential trade sanctions as a result of the UNHRC resolution affect our economy, Deshal?
It's important to look at this in the kind of sequence that it is likely to take place, and it's, I think, very unlikely in the short term to have sanctions being imposed. What we're likely to see is an incremental approach taken by the countries that have basically formulated the resolution on Sri Lanka. And if you look at, for instance, the situation that occurred in Russia with the annexation of Crimea and Ukraine, even then, which was the invasion of a sovereign state by another, even in that situation, we didn't see immediate sanctions placed on the entire economy, but you had sanctions on individuals and then an incremental approach towards institutions of entities connected to the government and so on. So I think it will be a similar kind of approach, if at all, with relation to Sri Lanka as well. I think on the bright side, though, it's still far from a certainty that this will take place, and there's a lot of stuff that is within the control of the Sri Lankan government and the Sri Lankan and civil society to an extent, in terms of mitigating this before it goes to that level. There are a number of elements of the resolution that can be tackled, that can be approached in a positive frame of mind. Many of which will have beneficial impacts on for the Sri Lankan population as well. So I think if we take a constructive approach in that way, we should be able to avoid seeing the potential negative impacts, and the negative impacts are certainly very substantive indeed. Yeah, I think it is something that we can avoid. Still, it's not too late.
Now on the plus side there, Fitch Ratings has provided us a stable outlook for our economy, and the IMF has also upgraded our GDP growth forecast from 6.5 to 7% based on moderate inflation and an improvement in our current account deficit. But what are the negatives in our economy at this point of time?
No, certainly. I think you mentioned some very good positives that we've seen on the macro fundamentals that we've been developing over the last 18 months or so. The negatives still are, I think, some of our old enemies, things like the fiscal deficit, which is, even though it's moving in the right direction, it's still relatively high in terms of accumulated deficit as well as the annual budget gap. And I think there the real concern, which we've spoken about before as well, is the limitations in government revenue, the fact that it hasn't really been able to keep pace with expectations. And certainly compares very poorly with some of our peer countries if you look at Southeast Asia and South Asia and so on. So I think certainly the government revenue side is a matter of concern, and then we need to also understand how the government would react to that in terms of curtailing expenditure. Where are the cuts taking place? So we wouldn't like to see, for instance, cuts being implemented in infrastructure or in on the social infrastructure side, such as education, health, and so on. So that needs to be managed quite carefully. On the other side, I think the lack of consumption growth and the lack of credit growth, I think those are areas that, again, we have touched on in previous discussions as well, which are, I think, prevailing issues. We're not yet seeing a major turnaround there as well. And I think I would say that those are some of the important ones, and also, of course, the foreign direct investment, where we are looking at 5 years post-conflict and still not seeing investment coming in a substantive manner as we would have expected. It's probably been below targets thus far. And also, if you look at the first quarter of this year, it's been quite positive. There's been a good growth compared to first quarter of 2013. But it's again important to look at where this investment is coming into. If you look at countries like in Southeast Asia, for instance, a good portion of the investment goes in, foreign investment goes into the manufacturing export sector. Whereas in Sri Lanka, a lot of it has been in the infrastructure and services oriented sector for the domestic economy. So in terms of a longer term growth prospects for the country, we'd like to see more investment coming into exportable goods and exportable services, which we haven't seen sufficiently yet. So I think those are the key areas where we're seeing the negatives.
Credit demand does not seem to be picking up despite growth assurances by the central bank. Now, what are some of the reasons behind this state of affairs?
I think the main issue is gold-backed lending, which we talked about, the fact that gold prices have come down and it has really prevented the kind of leverage against gold that we saw between 2010 and 2012. That has pretty much, I wouldn't say crashed, but it has declined substantially by around 170 billion rupees between 2013 and the first quarter of 2014. So there is a huge extraction of credit from the system. Some of the other segments of lending have either been flat or increased only quite slightly, and that is probably a reflection of that lack of consumption growth that we spoke about, and also still maybe a little bit of uncertainty on the investment front as well. So some of these issues seem to be coming together, and hopefully with the low interest rates, we might see an improvement in the demand for credit going forward. But again, thus far, nothing tangible.
That was economist and LMD columnist Deshal Dhimal. That's all we have for you this week. Thank you for watching, and we'll see you again next time.